to this video. This is 1stusFx, and in this video I'm going to be teaching you how to identify order blocks. Now, order blocks are very important because they tell you the volume, how institutions accumulate orders, and where institutions are readily going to buy or sell an asset. All right, so just like the name implies, order blocks, it means there are a lot of orders from that zone. So how do you identify an order block? All right, so this is a practical example. So we can see here that we have a bearish candle. So the market has been in a downtrend, and then we had this buys, which is usually a change of what trend. So how do you identify an order block? An order block is the last opposite candle before a new trend. So this last bearish candle you see here before this bullish move is what we call the order block. This last bearish candle is what we call the order block. So there are three things you must look out for to confirm that this is actually an order block. Number one, you want to see the low of this order block swept. All right, the low of this order block, or the bearish candle that has the last low, has to be swept. So if this second candle was the one that has the lowest low, let's say this candle's low was just around here, it means we want to see that this candle's low was actually swept. So we want to see that this candle's low was actually what? Swept. So we want to see that price has swept out those low. I hope you got that. So we want to see that price has swept out those lows. That's number one. Then number two, we want to see the bullish candle. You see this bullish candle that's next to we want to see this bullish candle close above the opening price of this bearish candle, or better still, the high price. In this example, you can see the bullish candle closed above the high of this candle, telling you that buyers are now entering into the market. So number one, we look for a liquidity sweep. Price goes below the low of the bearish candle. Number two, price closes above the open price or the high price. All right, we want to see that. And number three, we want to see a fair value gap. So this is a fair value gap. All right, so we want to see a fair value gap. So these are the three things to look out for to identify an order block. Now, when you have an order block like this, usually it's a good sign. Price could easily come back here or come to this order block and then instantly react from it. So this is a practical example of what an order block should look like. This is a practical example of what an order block should look like. Now, sometimes the order block is going to look like this. Let me see if I can duplicate this. All right, let me see if I can duplicate this. So we have a bearish candle. That has a very long wick. Some persons may call it a hammer or something like that. And then we have another bearish candle. So it doesn't have a lot of wick. And then we have a bullish candle. Let me take that again. So what you see is this candle sweeps this low, and then we have the next bullish candle, and then we have the next bullish candle. Okay, let me change the color so we can have a better view. Okay. All right, and this is a I pay close attention so you can get this. Look at practical examples soon. All right, I forgot to add this. So we add a wick here. We have this. So one thing you will notice is first, price did not take out this low. Can you see that? Price did not take out this low. Instead, price took out this candle's low before we saw price close first. So we see price close above the high. Can you see that? So you can see price close above the high. Lastly, we can clearly see that a fair value gap was formed here. Hope you can see fair value gap. So this is also a valid order block. This is a valid order block. So this is a valid order block. Hope you can see that. So what we expect price to do is for price to make a retracement into this fair value gap. So there's a fair value gap just before the order block. So price could just react from the order block and instantly continue to what? To buy. So sometimes you see price happen just like this. But usually we want to see a sweep happen just like we have here. So we want to see a sweep like this. All right, sometimes you may not see it on every time frame, but if you go down to a particular time frame, you will definitely see it. Now it's always best to, because these order blocks are also used for entries just like fair value gaps. And you know, when you want to pick entries, you want to go down to a lower time frame. So it's always best to go down to lower time frames like 15 minutes time frame, 5 minutes time frame, or 30 minutes time frame to look for these order blocks. Obviously, from a higher time frame, you already know the direction of the market. You already know the market structure. Hope you got that. So basically, this is what a order block is. This is how to identify order blocks in the market. So let's look at market examples so we can talk about them. Okay, so so here we have this order block, as you can clearly see right here. So we have this order block here. So you see, this is a bullish candle before a sell. So this is an order block. So you notice price comes back to it. Can you see to this order block right here, and instantly what? reacts, comes back to it again a second time here. Can you see price comes back to it again a second time and then explodes down? Hope you got that. So that's an example of an order block. All right, let's look for another example of an order block. All right. Okay, so this is a very practical example. Let me take this out. So do you notice that we have this low? So we have this lows that was swept out, but then price did not close above the bearish candle. Where it's our valid order block. We also have these lows that was not swept out. Also, price did not close above the bearish order block, right? And then we had these lows that price eventually swept out and price closed above it. Secondly, we have a fair value gap right here. Can you see that? And that is exactly where price reacts from. I hope you can see that. I hope you can see that. So this is a very practical example. Now some persons may also want to see price go above this bigger candle. So they want to see price close above it. And this is where they want to buy from. And you can see the persons that missed out the first entry bought from here. I hope you can see that. Now let's look at another practical example of order blocks. Okay, so this is an example of an order block. Let me take this out. Let me zoom in so you can see it very well. So this is a bearish candle, right? So you see price reacting from that order block. This is another order block we have here. You will notice the bullish candles always close above it. All right. This is another example of an order block. So we have these bearish candles. There are two, and instantly see price react from it. This is also an order block. This one, this bearish candle we have here, and you can see price reacts from it here, but then eventually breaks through. Now this is a bearish order block. So you see all these bullish candles here as the order block. What do you notice? Price did not get to it. So this was obviously manipulation. If you watched our video on liquidity, you know why the market shifted here. All right, let's look at another example of a bearish order block. Let's see. If we go down to left hand side, okay, so this is an example of a bearish order block. So this is an order block. Notice the candle closed below it, right? So but price did not come back there to mitigate it. All right, so this is a practical example of a bearish order block. You can see how price closed below it and price made a retracement, mitigated it, and then you see the massive sell off. All right, this is another example of a bearish order block. This, so price did not come back to it. We also have one here. It's also an order block. This bullish candle we have here, a bearish order block. You can see that is where price reacts from. So we're just trying to identify order blocks. Now this one failed. Hope you can see that this, where is it? So this is an order block. But why should you not be using this for a sell order block? Because the current trend is bullish. You can see currently the trend is bullish. I hope you can see it. So it will not be wise for you to mark this as an order block for a sell. You will just hit stop loss. So remember, follow the trend. All right, so you'll be looking for buys in this scenario. All right, so this example is where you should be looking at the order blocks here. Okay, now there are a lot of order blocks in the market, but there are specific ones you need to pay attention to. Let's see if I have other examples I can show to us. Okay, so basically that's it. So make sure you go to your charts, identify these order blocks. If you have any questions, just make sure you ask on the comment section. Okay, so this is an example of an order block. So we see series of bearish candles here. Price broke above it, so you can see the bullish candle close above it, and then price comes back to it, reacts, goes bullish. All right, this is another example of a bearish order block, but price did not mitigate it. I hope you can see price did not come back to it. All right, so somewhere in the future price is going to come back to it as well. So in our next video, we're going to talk about different types of order blocks and how to use them effectively to pick what entries. All right, so make sure you subscribe, like this video, ask questions, and share it as well. Share it to your friends that are having difficulties marking out or identifying order blocks. All right, so till next time, I'll see you in the next video.